Rebecca Kennedy here, your favorite Dallas-Fort Worth real estate agent. And this video is going to go over finding your lender and why your lender matters more than your credit score. I've seen families with 540s get approved. I've seen families with 700s get denied. And the only difference, the lender that they worked with. So let's talk about what comes first, the realtor or the lender. You've probably heard that you need to have a pre-approval before you start shopping for a home. But what most people don't know is that you need to find your realtor before you find your lender. We are the ones that have had countless transactions with lenders in all spectrums. So if you're in the Fort Worth, Dallas area, obviously you're going to contact me, and then I'm going to connect you based on your situation. So here's a little insight. Every lender sells a different product. That's right. A mortgage is a product just like anything else that you buy. And some lenders have 10 products. Others have 30 products. Some can work with lower credit scores. Others are going to demand that you have your credit in a nice, pretty tight little bow. Others do land loans. Others do mobile homes, agricultural, and so forth. Your realtor is going to know what is going to be best for your situation. We can get you the best approval options because we know who carries which products. We also know how each of these lenders communicate. Maybe you're someone who wants to know every single piece of the process. You have all the questions. You want someone to walk beside you for the entire process. We know who to send you to. Or if you're someone who, you know what, you just handle it. I don't want to be that involved. I've given you what I need to give you, and I just want to go and find a house and sign. We know who to connect you with. So there's no wrong answer, but talk to your realtor. Now, let's talk about your big box lenders. These are the branches on every corner. I touched on this a little bit in my other video. So if you're here because of the first one, thanks for coming back. But your big box banks, they want you to kind of fit into their parameters to get your approval. Whereas a local brokerage, a boutique mortgage company, they've got a little bit more give. They can work some things around, a little more wiggle room, a little bit more forgiveness and grace for you. Your big box banks, once you get your approval, what typically happens is you do your application with Bob. Well, Bob signs off on it. Yes, it's approved now. It's got to go to underwriting. Well, then Susan's going to take it from underwriting, and it's going to go down an assembly line. By the time it gets to Christy over here, well, she hasn't talked to Bob. Well, Bob is your contact, so that's who you're calling. So there's a lot of back and forth. There's a lot of inconsistency, and sometimes it can just be a nightmare to deal with. Also, you'll see that the big banks typically have higher interest rates. They're just not as efficient. They can also take longer to close. They're going to wait till the last minute to get anything completed because, again, this is the stopping point over here with George, but he can't do his job until Bob, Susan, Christy, and Phyllis and everybody else has done what they need to do. So just keep this in mind. Now we're going to talk about the different types of loans. So we have 3 different types of loans. The first one is probably the one that you're going to be the most familiar with. It's an FHA loan. It is a loan that is insured by the Federal Housing Administration, and it is designed to help people with lower credit scores that may need a little bit of help with down payment assistance. That first-time home buyer program that you hear about, that's through an FHA loan. And just a little tidbit, did you know that if you bought a house 2 years ago and you get ready to buy a new one, you can qualify as a first-time home buyer again? That's right. That only has to be 2 years from your last home, and you can qualify for those same first-time home buyer benefits. Again, if you qualify. The minimum credit score for an FHA loan is going to be a 540. But remember, the lower your score, the higher your down payment can be. Your down payment is going to be a minimum of 3.5%. If your credit is strong enough, if it is lower, then you're going to be looking at a higher down payment. But again, your lender can fill you in on that. PMI, which is private mortgage insurance, is going to be required throughout the life of your FHA loan unless you refinance it. But once you qualify, once you sign, you are paying PMI on that property. And stay tuned because we're going to go through and I'm going to actually give you some numbers and break down what this looks like as far as cost for you. But your PMI is typically 1% of the loan annually. So let's do the math. If your loan is for a $400,000 house, then 1% is $4,000 divided into 12 months is an additional $333 a month. So that's going to be on top of what your mortgage payment is. Now, property requirements for an FHA loan do matter. They do have a standard condition that has to be met. This is a government-backed loan, so they want to make sure that the government is putting in a good investment, right? You may see a house that fits within your 250 approval range, but it needs too much work and it's not going to pass inspection. If it can't pass inspection, the loan is not going to go through. That's why having an experienced realtor matters. We can weed through all of this information and save you a lot of time so you don't fall in love with something that's just not going to happen. It's going to save you time and heartbreak. Also, when you purchase with on an FHA loan, that does have to be your primary residence. It cannot be an investment property. It can't be your vacation home. You can't set it up as a VRBO. It has to be your primary residence. Okay, so our second type of loan is a conventional loan. Typically, when you make too much money to qualify for an FHA, then we transition over and we get you into a conventional loan. Those have a lot more flexibility. These loans are not insured by the government. They are backed by private lenders. So they do ask for a little bit more strong application, a little bit better credit. We're going to want to make sure that income is there, all of those things. You'll typically need a better debt to income ratio and decent credit. Most of the time, lenders want to see around a 620 credit score. Some will go lower depending on your situation. A down payment for a conventional loan is as low as 3%. You will also pay PMI on a conventional loan unless you put down 20%. Okay? Or you get 20% equity in the home. You can drop off the PMI. You can't do that with an FHA. But with a conventional loan, once you hit that 20%, you can lose your PMI. On a conventional loan, the property can be whatever you want. It can be in any condition you want. So this is if you are looking to build a portfolio, you want to start adding in a few properties to get that income. This is the type of loan that you're going to want because it doesn't matter what you're doing with the property. VA loans, these are for our veterans. And while these loans are not issued by the government, they are insured and backed up by the Department of Veterans Affairs. So no down payment is required. That's right, 0 down payment. You do have a one-time funding fee, and in Texas, that is 2.15% of the home price. So this can be rolled into your loan, or it can be waived with a down payment, or you may qualify to have it waived entirely based on your disability rating. But again, no down payment. You do just have to be aware that you will have that funding fee. And your lender, of course, can fill you in on what that would be for you. There is no PMI with a VA loan. So this is huge, as we talked about before, that can save you, $300, $400, $500 a month because you do not have to carry that monthly insurance. When it comes to actual credit and approval and income and just getting approved for a VA loan, it is much more forgiving than the FHA or conventional. So, 500 scores, they don't really look so much at your credit score number as they do the entirety of your situation. The one thing about the property conditions for a VA, though, they are very strict. The property does have to be move-in ready and it has to be safe. It is going to require a special inspection to check for wood-destroying insects, termites, roaches, anything that can damage the property. You cannot have any trees or bushes that touch the house All of that is going to have to be trimmed out and cleared. So if you see a home that has all of this greenery that is overrun, we've got to have all of that cleaned up. We've got to have all of that cleared out and trimmed before we can talk about that house as an option. Your lender is going to require specific certifications, your certificate of eligibility, and other documents that vary a little bit because this is a VA loan. Again, this is where having an experienced realtor like myself can really make a difference and just make this all a smooth process for you. Okay, so here's the bottom line. Not every lender offers every loan type. Not every lender is good at what they do. I have worked with lenders who specialize in all areas. I have worked with lenders who have said, you know what, this is going to work as it stands, but if you and I both take a percentage cut off of this deal, we can make this work. If you are ready to start the home buying process, don't call the lender first. Call me. Let's talk about the situation. Let's talk about your goals. Let's talk about the timeline. Let's talk about what's going on in your life and get you connected with who's going to help you the most. Hit the like button and share with someone you think this information would benefit from.